Hello and welcome back to Markets Today. Let's move on to the rest of the headlines now. The fourth headline now. GAIL India was buzzing in trade today after a positive note coming in from CLSA, where they actually increased the target price on the stock as well to 125 rupees per share versus 110 earlier. They maintain a buy rating on the stock. There are a couple of triggers that CLSA has spoken about for GAIL, and the first one is that they're expecting tariff hikes for the company by around 40%, and that is the reason why they've upgraded their EPS estimates by 14% as well. So GAIL earlier had proposed integrated tariff hikes, and this is across their transmission pipelines. They had proposed it to PNGRB, and PNGRB came back with some of the suggestions. Of course, they're not going to hike 70% tariffs is what PNGRB says, but CLSA believes that even if we take into account the recommendations of PNGRB, tariff hike could be around 50%, and that is a big positive for GAIL. They expect the final announcement to come in by mid-March, and that is because they have an open house, PNGRB, that is on 6th of March itself, where they will be discussing this proposal. Additionally, there are more commentary and more positive takeaways from this note. They're talking about the utility part of the business, which is more stable business, which has better margins as well. That is contributing around 58% of EBITDA now versus a lower share earlier. And the cyclical or the commoditized side, that is the marketing business, is just 19% of some of the parts of the target price. And 80% is coming from utility business and investment. So these are certain things which will lead to better performance as far as stock is concerned. And that's why CLSA is bullish on this counter. But let's move on. Mahindra Cie Automotive also gained after reporting a good set of numbers in the December quarter. The company saw good growth in the European business, with the EBITDA improving by 88% year-on-year and margins rising by 340 basis points. Sonia Shenoy is standing by with all those details. Sonia.
Well, thanks a lot for that. It was indeed a very good set of numbers for Mahindra Cie, and this is a stock that has doubled in the last 1 year. Now, the numbers were very strong, both overall as well as in the European business. Remember, Europe was undergoing challenges, but now the company has seen a steady recovery both in terms of auto demand as well as lower energy prices. Overall, for the business, the revenues have grown 26% at 1,342 odd crores. The EBITDA went up 93%, and the reported margins look very inflated at 18% versus 12% earlier. That's because of a one-time gain on the profit of a land sale that they did, which was to the tune of 38 odd crores. Ex of that, the EBITDA is still very strong at 15.7%. Let's move to the European business, where the management said that because the supply challenges have eased, the demand has come back and production has picked up as well. So overall, the sales went up 43%, EBITDA was up 88%, and the margins have picked up in the European business, A, because of the energy costs coming off, and B, because the extra inflation cost was passed on to the consumers due to higher demand. So all in all, good numbers from Mahindra Cie.
Okay, all right. So Mahindra Cie in focus as well. Sticking with stocks now, making news in today's trading session. Bhara Dynamics CMD Siddharth Mishra says he expects more than 10% revenue growth this fiscal itself. Also added that the company's margins have been impacted by rising research and development expenses. The stock, though, closed higher by 5% in trade today. Listen in.
See, this year we are very sure that we will surpass last year's target, and at least 10% growth will be there in our revenue from operation. So we are looking at between 3,100 to 3,200, and next year our target will be not less than 3,800 crores. See, margin we are looking more than 20%. We already in third quarter we have around 19%, and it will be more than 20% by end of this year. Margins have certainly come down, but this has come down because my R&D expenditures have gone considerably high. If you compare it from year on year, from 32 crores we have crossed R&D to 100 crores, more than 100 crores.
Okay, those are all the stocks and news, but moving on to the fifth headline now. Crude oil extends losses to second week on recession fears and more aggressive rate hikes. Further rise in US inventory also puts pressure on prices. Manisha Gupta is standing by with all the details from the crude world. Manisha.
Oh yes, this week is headed for a negative when it comes to energy as a space. If you look at the crude oil prices, overnight was a 3% decline, and for the week we are down between 5 to 8% depending on what crude variety you're watching out for. The prices also have been under pressure as we've seen China's demand still uncertain, and then all of the US data has been on the positive side, whether it has been retail sales, home sales, inflation, and that tells you that the US Fed rate hike concerns are back. The dollar index as well is trading at around 6-week highs, and that has weighed on all dollar-denominated commodities. And then the markets are watching out for the API data, which shows that the US inventories have increased for a 9th straight week, and this time around by 9.9 million barrels. The US gasoline prices also have declined by 4% to a 2-week lows in the overnight market. So not just crude, but the crude products have continued to decline. Same is the clue with the natural gas prices, where we are trading at a 29-month lows. We have seen prices break below $2 per MMBTU also. So with this kind of a decline, we are 45% down for this year and 80% down from the kind of highs that we saw in the previous year. Well, the inventories have been rising, not just in US but in Europe as well, and then the markets are looking at good production in US. The Norway outages also have been suspended now, so we have seen supplies come in from there too. So higher production, higher inventories, not such a great demand, warmer winter expectations as we are towards the fag end of it also continue to weigh into the space, with markets anticipating that there could be some more pressure as we head towards into the month of March.
Manisha, thank you so much for joining us with that analysis. Moving on, there's no respite for the Adani Group. 8 of the group's 10 listed entities ended the day in the red. Adani Total, Adani Green, Adani Transmission and Adani Power hit lower circuits over the course of the session. The group has lost market cap to the tune of 20,000 crore rupees today. This takes the total market cap losses since the Hindenburg report was released on the 24th of January to around 12 lakh crore rupees. As of today, the Adani Group's market cap stands at 7.4 lakh crore rupees. Yash is joining us as to what's happening as far as LIC's investments in Adani Group is concerned. Yash?
Well, the big headline as far as, LIC's investments are concerned is that LIC's investment in Adani Group companies have turned negative today. We've put together some interesting numbers supporting the headline, and these numbers also throw some interesting facts. Interestingly, LIC is likely to have sold Adani Group shares worth 6,400 crore rupees, which was between January 1st to January 24th. How did we reach that conclusion? Now look at the turn of events on January 27th. LIC disclosed that the value of its investments in Adani Group companies was 56,142 crore. When the same was calculated taking in consideration the December shareholding, it comes to 62,550 crore rupees. The difference is about 6,400 crore rupees or 10% of LIC's holding in Adani Group companies, which is likely to have been sold between Jan 1st to Jan 24th. Now let's come to the point of LIC's investment in Adani Group companies turning negative. The closing value today for LIC's investment stood at 33,215 crore rupees. Adjust this to that possible 10% stake sale which LIC made in January. That will give you the number of 29,893 crore rupees. Now this compares to LIC's total cost of purchase, which was 30,127 crore rupees. So as things stand, LIC is sitting on losses of approximately 234 crore rupees on a mark-to-market basis. As I mentioned, LIC bought these stocks at 30,127 crore rupees, and its investment value as of today's market close is 29,893 crore rupees. This shows that LIC is in the red by about 234 crore rupees.
Okay, all right, Yash, thank you for joining us with that analysis. That's about the Adani Group and LIC's investment in the group as well. And with that, it's a wrap on this edition of Market Today. Thank you for watching.
Brought